Bitcoin hit the 93k level as we highlighted in the video yesterday. It tested that resistance and was rejected again from there. This happened yesterday. There was a second attempt today at the release of the news of the CPI data, which actually remains unchanged. The actual was 2.7%, the forecast was 2.7%, and previous 2.7%. So CPI remains unchanged, which was kind of neutral for the markets, but we still saw an attempt for the 93k level to be broken above that. So I would say the market will provide a clear direction in the next probably 2 to 3 days. It is just a matter of patience, and in my opinion, we are more likely to break above the 93k level and move to the upside. Potentially 100k is my target for early February, towards the end of this month, early February. We discussed the CPI data which was released today, and today I want to talk about, I see a lot of comments, everyone wants to know one thing in crypto, what I'm holding, what other influencers are holding. If you're on Discord, by the way, you can see my portfolio, and if you want to join Discord, I'll drop a link to it in the comments and description below, and I'll be very happy to welcome you as part of the community. But for those who are not, I want to tell you that the real edge isn't just what you hold, it is how your portfolio is structured. This isn't a financial advice, this is just purely how I personally think about risk, cycles, and capital allocation going into the next phase of this market or going into 2026. Because what we've seen so far in 2024, 2025, they are not the same years as we had in the past. We are now, we see a more selective maturity-driven phases, which means that not everything will pump equally. Strong projects will outperform, weak narratives will just die quietly. Portfolio structure becomes more important than chasing the next shiny token. And my approach personally is very simple. I have core stability, I have scalable growth, and I have controlled speculation. These are the three parts that I think about when building my portfolio. Quite a big allocation of my portfolio is dedicated to Bitcoin, around 30%. Because Bitcoin is not here to give you 100x returns, and I don't expect 100x returns anymore, or this kind of fantasies. Bitcoin is here to anchor your portfolio, to absorb volatility and protect capital when risk comes off the table. And I can tell you that if you were holding only Bitcoin in 2025 and 2024, you would have made much more gains and profits compared to holding altcoins, because altcoins have been really underperforming and not so great. But if you just invested into Bitcoin, held it, you would have been much more profitable right now. And in every cycle, Bitcoin leads the market. It is the first asset institutions buy and the last asset that they sell. So in 2026, Bitcoin will remain digital collateral, the cleanest macro crypto bet, and the asset that everyone should have in their portfolio. A very small percentage of the total world's population is into crypto and know about Bitcoin. But we can see that it is being more and more pushed by institutions and by global adoption. So if you're already in crypto and holding Bitcoin, you're ahead of the curve, ahead of everyone else around the world. If everything goes wrong, Bitcoin will survive. So definitely 20-30% should be allocated to Bitcoin, and this is what I also have. Around 30%, I would say, of your portfolio should be in high conviction, large market cap projects. Projects like Ethereum, Solana, XRP, Cardano, Polygon, those in the top 10, BNB if you wish, in the top 10 of CoinMarketCap if you sort the projects by market cap. I personally hold Solana and Ethereum, so the higher allocation is to Solana. If you ask me why, because this is when liquidity flows after Bitcoin, institutions get exposure and real usage actually exists. As you know, Ethereum, for example, is still the backbone of decentralized finance, and it will be. It is a settlement layer for the entire ecosystem, and it's also beneficiary of ETFs, staking, and fee burns, and so on. Definitely, it's the second most secure project after Bitcoin. Solana, for example, why I'm holding that? Because it's it has high performance executions, it has retail adoption apart from institutional adoption, and it has strong developers momentum. If you want to know a lot of your XRP holders, XRP is payment narrative, regulatory clarity improving, and asymmetric upside if adoption accelerates, especially more usage by institutions. So these are not moonshots, these are scaled networks with retail users. So definitely I think 30 or 40% of your portfolio should go into those. Of course, you can't have all 10. You should focus maybe on 2 to 3 depending on your budget. You don't want to over diversify too much, because this makes your portfolio very difficult to control, and also you can't make big gains on that. But again, on the other side is don't put all your eggs in one basket. You need to diversify, but not over diversify. You need to find a balance depending on your budget and your money for investment. Then I would say 30% of your portfolio should be dedicated to maybe layer one, should be dedicated to layer one ecosystem plays. And 30% or 40% of my portfolio is allocated to layer one ecosystems. Examples here are Sui, Sei, Caspo for me personally. These are great projects, newer ecosystems, but with a lot of potential. Every year we have more and more projects coming into the picture, and these are better than the ones that already exist. For example, I see Sui competing with Solana. I see Sei competing with Sui in the future. I see Caspa competing with even Ethereum, and so on. So there are more competitors coming. They're better in terms of technology, but it would take time because it's not so easy to replace something that's been there for years and already well established and with great rate of development. Let's say for Solana, XRP, those continue to develop. So for those, I look for strong narratives, active development and ecosystem growth, and institutional interest, not just price action. Of course, these are higher risk than Ethereum, than Solana, than XRP, but also they have higher potential. And one example is Sui. We bought Sui at 40-50 cents on Discord, and it scaled to $5 just in a year. So these were massive gains that we made. So the potential here is quite high, but also the risks are higher. Of course, you don't need 20 layer ones, you just need very few strong bets with active development, with clear use cases, and with real on-chain activity. That's a very important metric that you need to observe and to track, because that actually shows you the rate of development. Then I would say around 5% of my portfolio is into small cap opportunities. I've got Debug Protocol, Research Coin. We've also got Aster. We managed to make good profits with Aster. I'm still holding a small position of it. So around 5 to 10% is reserved for small cap plays. This is where the asymmetric returns live. But this is also where most projects fail. Liquidity disappears first and emotions destroy accounts. And how I think about those allocations, these are positions that I'm willing to lose entirely, and I won't be bothered that much. So if a small market cap goes to zero, my portfolio survives. If it goes to 10x or 20x, it meaningfully boosts my returns. This is optional risk, not core capital. You have to know that. And I have another 5% which is dedicated to, let's say, the so-called gambling or lottery money. These are for pure speculation. This includes meme coins, some short-term narratives, and momentum trades. And this capital has one rule: no emotional attachment. If I size small, I take profits fast, and I never average down. If I lose, I don't care. If I win, profit rotates back into stronger assets. This keeps me engaged without risking my core portfolio, which is important. So I hope you found this helpful. It's just overview of how I think when I'm structuring my portfolio and how I'm actually positioned for 2026. I'm not trying to hit the perfect top. I'm trying to stay in the game long enough to win. If you structure your portfolio correctly, the market does the heavy lifting for you. You just need to stay patient and observe and monitor. So that's for me today. Thank you so much for watching. I'll see you in the next video.